Good morning, good afternoon, good evening, wherever you're watching me today. My name is Peter. Welcome back to Invest with Peter. So today I'm going to be talking about three good companies that you might want to consider towards 2022 because we all know inflation is coming. There's nothing we can do about that. Jerome Powell is actually saying that, tapering is happening and all that stuff. So 2022 might be a bear market for us investors, but we actually need to consider some of these companies just to balance up our portfolios. But before I go into it, I want to say if you've not subscribed to this channel, please kindly subscribe, put your comment down below and like this video. Probably share with your friends and family, those who are interested in stock market and those who are probably thinking about investing in the stock market. So today these companies are going to do their, most of them are value stocks, but I'm going to be sharing it this week. All through this week I'll be sharing it. So if you've not subscribed, you probably want to do that now so that you won't miss any of these stocks that I'll be giving throughout this week during this holiday. But it's Christmas time, so Merry Christmas and Happy New Year to everyone watching me, my friends and family around the world. Everybody, subscribers, you are welcome to this platform, this channel. Thank you for subscribing and Happy New Year to you in advance. So today the first company is Chevron, right? Chevron, we all know Chevron, they are into production and refining of, oil, crude oil and everything. So this company is one of the companies that you might probably want to consider because there's no point that humans don't use crude oil. We use, though EV is coming, the climate change and everything is happening, but crude oil ain't going to go anywhere very soon. So we're still going to be using crude oil up until probably into 2035, 40s. There's no way they're going to eradicate this all of a sudden or probably automatically. There's still going to be, some sectors going to be using crude oil, refined and fossil fuel at some point. So Chevron, this company engaged in integrated energy, chemicals, petroleum operations worldwide. It operates in two segments, upstream and downstream, right? So the upstream is involved in exploration, development and production of crude oil and natural gas, processing, liquefaction, transportation. But the downstream part engaging refining this crude oil into petroleum products, marketing it and also marketing this crude oil, refine the product and lubricants. So those are the two segments in Chevron. We all know we all go to the filling station to buy fuel. So this is going to be a good one during inflation. So the present stock price is $161 and RBC Capital actually said this company is going to outperform in its category. So Morgan Stanley even says it's going to be overweight stock in its category. So the stock it has dividends. You get paid apart from the price increase. You still get paid dividends. And dividend is 4.6%. So and also the market cap is 224.4 billion. So that's a good company. The PE ratio is 22. That's good. Any PE ratio under 50 is a very, give me any day, any time. I'm going to grab it off you. So EPS is 5.7. So this is good as well. So the tip ranks give these a strong buy and a forecast of $125 in 12 months. So there's no brainer. I'm going to be grabbing these. I don't have any of these at the moment, but I'm probably going to be grabbing these towards 2022. So the second one is Nvidia. We all know metaverse is going to be coming. That's one big thing that is coming, just like internet when it came in 1999. So metaverse world is coming, and this is one big company that's gonna be the major distributor or major big gun in this category. So this company operates in virtual and computing, and worldwide. It operates in two segments as well: the graphics, computing, and the networking. So the graphics segment actually offers GPU for gaming. People are into game PC, grid software for cloud-based and virtual and visual, both virtual and visual, computing, and also automotive platforms for infotainment systems. So there's this shortage of chips around the world for vehicles, EV, and everything like that. So this company is into that as well. They are big, they are big into this as well. So there's no brainer. This company is also into autonomous vehicle solution. We've been talking about, in the future, autonomous is going to be the biggest drive of the EV and all that stuff. This company is into it. So in short, Nvidia produce, and use, they produce gaming, professional visualization, data center, and automotive market. So they are into gaming, tech, chips, autonomous system and everything like that. So there's no point that you should be ignoring this particular stock. It's a very big one and it's going to do well, in the nearest future. So The stock price is now 296. I've been dollar cost averaging since when it was 176, 186, something like that. And I keep buying into this company. So, because I believe it's going to be a big one and it's going to be a big winner in the nearest future. So, analyst says this is a strong buy, and I'm taking that as a strong buy because no one can say Nvidia is nothing to be, so to be reckoned with. So you better start, dollar cost averaging into this company. So the company, beats earning, like a child's play. So there's no go do your due diligence. You're gonna see what I'm talking about. They beat earnings every time. Q1, Q2, Q3, they're doing well. So Tipper and Getty, they give this company a $400 in 12 months. So Nvidia P ratio is 91, though it's high because it's a tech company, but there's nothing to worry about in this company. The EPS 3.24, market cap is $738 billion. So I'm going to be grabbing these, and I think you should probably consider this as well. The third one is Goldman Sachs. We all know that banking, they do well during inflation. Ask any seasoned investor, they're going to tell you banking, it can be overemphasized during inflation. You probably you need to get yourself into banking as well. So Goldman Sachs, we all know they do well during this time, and I'm probably going to be getting this as well at some point. So Goldman Sachs, they're into financial institutions, they provide financial services to corporation, financial institution, individuals worldwide, investment banking, and governments, global market and asset management. They're into it as well, and consumer wealth management. So this is going to be a big one as well to consider towards 2022, and the stock price is 382 at this point. So analysts give it a strong buy, and probably going to be Tiprank also says this is going to be a $576 in 12 months. So if you buy it now and 5-6, so see the difference there, like 20 something percent, upside. So there's no brainer in that one. So P ratio is 6.35, EPS 60.63. The dividends, they give dividend 2%. Like that, market cap is 128 billion US dollars. So these are the top three, I think, that anyone will tell you will be a good buy during inflation. So the best time to be buying to this company is now, not when we have inflation, before inflation, so that you're going to get the benefit of getting involved early enough. So guys, I've come to the end of this now. I'll see you on the next one. I'm going to bring another one again this week again. So I don't want to bore you. I don't want to waste your time. My name is Peter Ads, and I'll see you on the next one. Bye for now.